Hello, and thank you for joining today's virtual financial fair. I'm Angelo Gonzalez, a consumer loan officer here at UNFCU. Today, we're going to explore the ways that our finances can change along with the different milestones in our lives. Next. We can organize these major life events into four main sections or phases. First, we have getting started, where we want to create a strong foundation to start building for our future. Next, we have managing debt, where we want to keep our money growing and our debt low. Following that, we have new beginnings, where we typically want to start planning for life's big events. And finally, we have life's curveballs, because we want to be prepared. We want to be prepared for, because they can happen to anyone at any time. Next. So as mentioned, getting started the right way with your finances is very important, because these are the building blocks we can use to create a really strong foundation for our finances. Next. Budgeting, put simply, is making sure that your income and expenses are well balanced, taking into account how much you'd like to save. To make a monthly budget, first consider all your income. Then review your daily routine and its expenses, and whether they're fixed, like rent, for example, or variable, like buying a cup of coffee. You then want to subtract all your expenses, both fixed and variable, and this will make it clear whether you're spending more than you make. And although it might seem obvious, you want to spend less than you make so that you can save the remainder in a separate account. Once you make a monthly budget, try to map it out for the next 6 months to a year. This helps you anticipate when the funds might be tighter so that you can adjust it accordingly. For example, the holidays typically require more spending. Also, it's worth noting here that budgeting is a great habit to keep throughout your financial journey. By keeping familiar with your spending, you can detect unusual charges more easily. Next. When thinking about a budget, a helpful guide to stick to is the 50-30-20 budgeting rule. With this, 50% of your income covers all your necessities like food and rent. 30% is for spending on things that you enjoy, and the remaining 20% goes into savings. Savings are particularly important for life's curveballs, so try not to dip into that 20%. Obviously, sometimes it's fine, but really try to make an effort to save. Next. Also, within the getting started phase, you want to identify your goals, right? Think about the things you want, both short and long term. For example, taking a vacation might be a short term goal, or buying a home might be a longer term objective here. Then estimate how much each would cost. And once you've set a date for when you need the money, it's easier to adjust your daily spending accordingly in order to reach that goal. Next. Moving on to our next phase, which is managing debt. As much as we try to spend less than we earn, sometimes we just can't avoid spending more. You may need to make a large purchase on credit per se and pay the balance off over the next few months. Within managing debt, I believe it's very important to talk about credit. Understanding credit can be very confusing, especially when it comes to whether we're building it or using it or just simply misusing it. A credit score basically shows a lender how likely you are to pay back a debt. With a higher score, lenders are more likely to trust that you'll pay the debt back, and then you're more likely to get approved. That's why making payments on time is so important, right? It actually raises your credit score over the long run, and it improves your overall credit profile. Lenders can see that not only will you pay them back, but you'll do so reliably. Quick note here, UNFCU uses a custom credit scoring model for members who do not have an established US credit history or a social security number. We have an established matrix that takes into consideration certain things like income, employment history, resident history in order to establish a custom score. Next. So there are a few ways to improve your overall credit score. Probably the most important one is paying on time. Paying frequently also helps too. You can try to make small contributions several times throughout the billing period and not just on your due date. This helps keep your balance low, which in turn lowers your overall credit utilization. And just a quick point here, your credit utilization is basically the ratio between the balances that you owe and the credit limits on those lines. You want this to be around 30% or less. Obviously, the lower, the better. You can also avoid closing credit cards. Lenders like to see that you have these good habits long-term. In fact, the older an account is, the better. And even if you no longer use it, you can just store the card away and leave that account open and use it periodically on small purchases in order to improve your credit. Also, use credit monitoring services to track your progress, and these don't have to be expensive services. You can get a free credit report once a year from annualcreditreport.com, for example. You can also use apps like Credit Karma to monitor your score and your credit history for free. Next. When servicing your outstanding debt, you want to make sure that you're fully aware of the essentials. When your payment is due, for example, the rate of interest on your balance, and whether your payment is going towards your principal balance or the interest. Set yourself up for success. Set up payment reminders on and automatic payments to ensure that you never have to pay a late fee. And remember, making payments strengthens your credit. For credit cards, make at least a minimum payment each month. Also, consider what type of card you have. If you have a rewards card, you can use that cash back to help pay down your statement balance. One note here, get to know your cards because they can actually work for you. I think most of you have already seen the managing your card and digital banking presentation. So know the characteristics of each card. Lastly, avoid using your credit card like for cash like you would with a debit card. When you use your credit card to withdraw cash, it's called a cash advance. And there are additional fees associated with cash advances that can add up and lead you into more debt. Okay, so if you have multiple loans or have a balance on several credit cards, it may be helpful to consolidate those debt into a new loan. This debt consolidation loan makes things easier by combining multiple monthly payments into a single payment. Additionally, this new loan could have a lower interest rate, as is oftentimes that you have a more favorable interest rate than on credit cards, which means that you could ultimately pay less overall. Next. The next life phase that we want to discuss is new beginnings. With new beginnings, your financial priorities may shift. You may want to relocate, buy a home, get married, start a family, or simply save for your children's future. Typically, this is when our income begins to grow as you progress throughout your professional career. Next. If and when you relocate, it is first important to remember that no matter where life takes you, you can always remain a member of UNFCU. When you're relocating, it's a good idea to first visit your new city or town just to get an idea of how your daily life might change. For example, will your transportation needs change? If so, you may need to get a car if you can't rely on public transit at your new location. Declutter your current home and sell what you no longer need. This is a great way to reduce the amount of things that you need to move while also earning some income. This is also a good time to think about your housing situation. A house is usually the biggest purchase that most people will make in their lifetime, so it might be a good idea to rent first while you get a feel for the different areas and neighborhoods. And once you know exactly what you want, you might decide that buying a home is the next step in your life. For more helpful tips to find out whether renting or buying is best for you, you can visit unfcu.org forward slash decide to view our infographic. Next. So before you relocate, start building a budget to cover these kinds of changes. There may be lease termination costs and down payments for home purchases and deposits for rentals. Also have in mind a general cost of moving into a new place, moving your belongings, purchasing new furniture, etc. Next. Now, you may be looking to buy a home in the US. And just like relocating, you should always have a budget in mind when you're buying your home. Besides the future monthly payments, you will need to pay for certain things up front, like your down payment, closing costs, and move-in expenses. There will also be property taxes and insurance costs on top of your monthly mortgage payment. And these are things that will be covered in greater detail tomorrow, by the way, in tips for purchasing property in the US. Note, always stick to your budget. Don't try to buy a house that you cannot afford. A pre-approval letter will help you understand what you can afford. And you can learn, again, more about this and about your US mortgage options from our experts in the mortgage department tomorrow if you're interested. And don't forget to register. Lastly, don't be shy. Talk to your potential neighbors. This is a great way to learn about the area, what they like most about living there, and their challenges. Also, it's a great opportunity to see how well you get along with your potential long-term neighbors. And as always, savings are important, so be ready to have money for unexpected repairs. Next. Also, under new beginnings, you have starting a family. Once again, budgeting is the best way to be prepared. Make sure to account for childcare expenses and possibly less income for any time out of work or if one parent chooses to stay home. Be sure to factor in hospital bills. Be familiar with your health insurance coverage so you know ahead of time what you're financially responsible for. Also, look into accounts with tax benefits in order to start saving for your child's behalf, such as a 529 plan. And these are state specific, so check with your state to see if your state has an option. Remember that your family members can also join UNFCU. Even your child can open a Start Smart account. Next. The fourth life phase that we will talk about is life's curveballs. Sometimes things happen that we just don't see coming. And for that, let's be as prepared as we can. Next. We recommend setting up an emergency savings account that is equivalent to at least 3 to 6 months of living expenses. This can help for large unexpected costs like medical expenses, for example. It can also act like a safety net in times of need, so you don't have to resort to high interest credit cards or loans. It's especially important if you already have debt because it can prevent you from needing to borrow more. For an emergency fund, try to find a high yield savings account that allows you to make continuous deposits. This account should also allow you to make withdrawals when you need to without any penalties. Then set up direct deposits into that account from a portion of your paycheck so that you do not even have to think about it. The remainder of your paycheck should be deposited into your checking account, which is your spending account. And after a couple of months, reassess and adjust your contributions to your emergency fund just to make sure that you're saving enough. Next. Okay, so whether you find yourself having lost income, having budgeting problems, or you just want to save more, here are some tips on how you can cut down on your daily spending. You can cancel subscription services that you're no longer using or just don't need. You can review all your monthly costs and see if you're getting the best deal on your cell phone plan, for example. You can always shop with a list to avoid impulse purchases. You can try to use your debit card when possible to try to avoid overspending. You can also make meals at home. And lastly here, embrace do-it-yourself projects so that you can save money on repairs and fixes around your home. Next. Remember, it's always good to have a plan. Make sure that you designate a beneficiary on your accounts. Since no one can predict worst case situation, designate someone known as a beneficiary to receive the money in this account in case of your passing. Creating a will can help make things easier for your loved ones who will already be going through a tough, difficult time. And even if you do have a will, you should assign beneficiaries for each of your accounts. Like most financial institutions, UNFCU does not review wills, but we do have access to your beneficiary information. Also consider assigning a durable power of attorney to all your accounts. This is a legal document giving one person the power to act for you in cases where you are unable to act on your own. And you want to think carefully about this given the scope of authority you're giving someone else. Next. Okay, so that concludes my presentation for today. I want to thank all of you for spending this time with me. I really appreciate it. I hope that this has given you an idea of what kinds of things to consider throughout your life's journey. And remember, even if you relocate, retire, or separate from the UN, you are always part of the UNFCU family. And lastly, I just want to encourage you to reach out to us at the Consumer Lending Department at any stage of your life for any financial needs and if you have any questions.
Thank you, Angelo. Definitely plenty to consider that you spoke of, from budgeting to managing, but overall, have a plan. Have a plan in place, especially for those curveballs that life can throw at you. So we do have some time for questions, and we have some coming in. So if you're ready for the first one, how long does it take to build credit? So many have been living here in the States and have a Social Security number, but they find that it's quite challenging on the credit scope because they come up with insufficient information and are unable to obtain credit.
Okay, so there is no set time for how long it takes you to establish a credit history and build your credit. It is a gradual process and it does take time. So, typically when people start, they usually start with perhaps a small credit card. Make sure you pay that on time every month. And you would slowly apply for more credit and build in that sort of way. You don't want to go too fast when you're applying for credit. So like I said, if you don't have any credit at all, try to get a small credit card, pay that on time every month. And that limit should grow with, whatever bank you have. And as your needs arise, you can apply for further credit. And the longer you have these accounts open and the more payments that you make on them, you'll start seeing that your credit score will be getting better over the long run.
Okay, so time is definitely a factor there. You spoke about a 50-30-20 budgeting rule. Should taxes be considered when budgeting?
Yeah, first, want to make sure that you speak to your tax advisor for questions about taxes. But with that being said, it is generally best to factor in taxes whenever possible. This can give you a more accurate idea of your spending, especially when taxes can amount to hundreds or thousands of dollars. So yes, you want to calculate your budget using after-tax income.
All right, great. Nice insight on seeking help from the financial advisor as well. It's a good tip. Now, what kind of savings accounts are best for the emergency funds that you talked about?
Okay, so you want to try to use a savings account that have a high annual percentage yield, which if you won't be withdrawing from then the account often, this can help your savings grow. For example, UNFCU's Tier 1 savings account has a 0.05 APY for balances up to 2,499, and this increases 0.15% in Tier 2 for balances 2,500 to 24,999.
Okay, thank you. Now, when preparing for sending maybe some loved ones to secondary school, like colleges or universities, do you have any advice on the loans for those attending a college or university?
Okay, so first, you can work with your school's billing department to get an accurate idea of the cost, obviously. Um, and don't forget to apply for other opportunities such as financial aid or scholarships or grants. That being said, UNFCU does offer education loans that don't have any application fees or prepayment penalties. Uh, UNFCU also offers free credit life protection up to 55,000, which means that in the unfortunate event of your passing, your debt will be forgiven up to 55,000.
Okay, thank you for that. So last question here we have is, can you tell us a little bit about the difference between joint account holders and a beneficiary on an account?
Sure. So a joint account holder completely shares the account with the primary account holder. They have the same rights and access to the account as a primary account holder. A beneficiary, however, does not have rights or access to those accounts. They can only receive the money in your accounts in the event of your passing. If you want your beneficiary to have access to your account now, you can add them as a joint account holder. And you can designate your joint account holders to also be your beneficiaries, but it is not required.
Got it. Got it. Thank you for that. Well, that's a wrap. Thank you, Angelo, again for taking time for our Q&A.